Hi there, this is Humaira, the founder and CEO of HM Accounting. So today I'm going to be covering EMP501s and I'm going to be making this super easy for you and your business so that you can submit your EMP501 stress-free. The submission period is just around the corner. And if you are a South African business owner, you'll definitely want to get your payroll ducks in a row to make sure that this process is stress free and everything goes smoothly. So, whether it's your first time or you're a seasoned pro now, navigating the EMP 501 submissions can definitely seem a bit daunting, but it does not have to be. In today's video, I'll be walking you through what an EMP reconciliation is, why it matters, and how to prepare for it without breaking a sweat. So, first things first, what is the EMP 501 reconciliation and why is it so important? Simply put, it's a report that ties together everything related to your business's payroll and tax obligations. Think of it as an annual checkup to ensure that SARS, which is the South African Revenue Services, has accurate information about what you have paid to SARS during the year through your monthly EMP 201 submissions, right? What you have deducted from your employees, such as your PAYE tax, the UIF, and the SDL, which would have been submitted via the EMP 201 and paid over monthly to SARS. Then they also want to check what is recorded on your employees' tax certificates, which is either their IRP5s, if they are a PAYE taxpayer, or on their IT3A if they are not PAYE taxed, right? Now, why does all of this matter? Why is the EMP 501 reconciliation so important? Number one, it's a legal requirement. So submitting your EMP 501 is a non-negotiable. Missing this deadline can and will lead to penalties with SARS. It will also put your tax compliance status into non-compliance. As long as you are registered for EMP 201s, you need to submit an EMP 501 to SARS as well, especially if you have employees who are paying PAYE. It's definitely a key feature for your employees. Accurate submissions ensure that your employees receive the correct tax certificates and it makes tax a breeze on their end, right? Because it's already uploaded to their tax profile. It also prevents your SARS queries. A mismatched reconciliation can raise red flags with SARS, and nobody wants that. And if it is incorrectly allocated, you could end up paying in some taxes to SARS at year end or during the interim submission period. Correct allocation of tax credits. Submitting an accurate EMP 501 ensures that your employees' earnings and deductions are reported correctly, positively affecting their annual returns, right? If you are going to be declaring or under declaring taxes or PAYE on the annual reconciliation as an error, they are going to have to pay those taxes over to SARS, even though they have already paid your company the taxes or paid you the taxes to be paid over to SARS. So it's really, really important that you get this right for compliance sake, but also for your employees' sake. Now, let us talk about the key dates for the EMP 501 submission. This declaration is submitted twice during the tax year, and you've heard me speak of the interim period. That covers the transactions from the 1st of March to the 31st of August. So it's the half year transactions. Those declarations are due by October 31st. Then we have the annual period, and this covers your March to your February transaction, so the full accounting cycle, and it is going to be due to SARS by the 31st of May. So make sure that you mark these dates in your calendar to avoid any last minute rushes and potential penalties for late submissions. I like to get my clients' EMP501s uh, done as soon as the EMP201 for March, the March period, which is based on the February salaries, have been submitted. I start doing the calculations, and as soon as the EMP501 period opens with SARS, I submit their EMP501 returns. I don't wait for the deadline. I don't like to wait to do things last minute because you never know what you might incur at the very last minute, right? So definitely don't leave it for the last minute. All right. So now that we know why it's so important, let's talk about how you can prepare for the EMP 501 submission, right? And here is a step-by-step guide. You are going to check your employees' tax certificates and ensure that all of the employee tax certificates, so the IRP5s and the ITAs, are accurate and they are up to date. And they should include details like their earnings, their PAYE deductions, their UIF and their SDL contributions, and any ETI, which is employment tax incentive claims. You are also going to revisit your EMP 201 submission, and you are going to double check that your monthly EMP 201 submissions align with the payments that you've made to SARS. An easy way of doing this is by checking your statement of account or having your accountant provide you with the statement of account. And if there are any discrepancies, then now is definitely the time to resolve them. This is when you will have to pay over the balance of the taxes to SARS if you did not settle everything during the year. Step 3 is going to be to reconcile your payroll records. This involves matching your payroll records to what's been declared to SARS. If you're using payroll software, most systems include a handy reconciliation feature to simplify this process. I would definitely recommend using Sage Payroll. It will make this process absolutely efficient and seamless and ensure that everything is up to date and accurate. We do offer this as a service as well. And we also do trainings on how to use Sage itself for business owners, including the payroll, right? Your step 4 is going to be to update employee information. Ensure that your employee information details like your ID number, that their tax reference numbers are all accurate. These small errors can result in a rejected submission. Step 5, use the right tools that SARS offers. There is a free tool called eFiling employer, which can help businesses to handle their EMP 501 submissions. So make sure you're using the latest version for a very smooth process. Also ensure that you back up and keep your files regularly backed up so that there's no errors, because oftentimes EasyFile has errors, especially when they're just releasing new versions, and you want to have your information backed up so that nothing gets lost. Alternatively, you can submit your EMP501 declarations via your SARS business e-filing profile. You can do this for up to 50 employees. If you have more than 50 employees, you have to ensure that you are using EasyFile for submissions. Here are some common pitfalls to watch out for when it comes to EMP 501 reconciliations and declarations. And I've obviously realized this from many, many years of doing this. I have over 15 years of experience in this field now. So I am definitely going to try my best to make you aware of the very common pitfalls that tend to happen. The one is inaccurate employee information. Please do double check the details submitted. Errors in your employee data can lead to complications with their personal tax submissions, as I've said earlier. Number two is late submissions. Procrastination is such a common issue. Schedule reminders well ahead of the deadline to ensure that there's timely compliance and avoid interest and penalties. I've also spoken about this in detail in my earlier conversation. So please do schedule in those reminders. Use your calendars, Google Calendars, your diaries, anything that you use to ensure that you do not miss the deadline and do it well in advance. Number three is failure to reconcile. So, not reconciling your payroll data with your payments to SARS is a frequent oversight that can lead to overpayment of taxes. Let's move on to our next slide, which is tips to make your submission a success. Once again, I have over 15 years of experience in this field, so I'm hoping that the tips that I share with you are going to bring you so much of value and help to create a simple submission. So here's some bonus tips to ensure that your submission is smooth and tax-free. Stress-free, not tax-free, but tax-free applies too. Definitely start early. Don't wait until that deadline looms. Begin your preparations now to identify and resolve any issues early. Keep an eye on ETI. Do you see how that rhymes? Yeah. If you've claimed the employee tax incentive, ensure that your calculations are correct and backed up by proper documentation. Very, very important to have proper documents that are in order in case any audits arise. Number three is to resolve discrepancies quickly. If you spot any inconsistencies, act fast to adjust your payroll or make those additional payments to SARS. And number four is to seek professional help. If this all feels overwhelming, do not hesitate to contact a tax professional. It will save you time, it will save you stress, and it will potentially save you money. Let's move on to our next slide. Now, if payroll and tax compliance feels like an absolute headache to you, then HM Accounting is definitely here to help. We offer comprehensive payroll support, including your EMP501 reconciliations, so you can focus on what matters most, which is growing your business. And here is how you can get in touch with us. You can WhatsApp us on 067 121 3652. You may email us at info@hmaccounting.online. You can also visit our website at www.hmaccounting.online. And don't forget to check out our blogs for more insights. We share a ton of information on our blogs about EMP501 submissions. Download our free ebooks. We've also got tons of those on accounting, on bookkeeping for beginner businesses. So please do have a look at those and subscribe to our newsletter for regular update. We frequently send out newsletters to our subscribers, keeping them informed of everything going on around them. And that brings us to the end of our presentation and information session. Thank you so very much for watching. Please don't forget to hit that subscribe button and follow HM Accounting on LinkedIn and Facebook, as well as YouTube. Let's make this EMP501 season stress-free together. See you in the next video.